Let's get more on this live from Dallas. Ed Butowsky, a leading expert in the investment wealth industry and also founder of 720. Welcome to the show. Good to see you again, Ed. You've gone on the record saying that if Congress fails to raise the debt ceiling, you're saying that that might actually be okay. What's going on?
Well, no, I don't know where that came from, because I haven't said that. I mean, Congress is going to raise the debt ceiling. If they don't raise the debt ceiling, that's not a good thing. So without any question, it will be raised. The bigger question is, what are we going to do to make it so we don't have to continue raising that debt ceiling? And without any question, it is a problem. The debt in this country is a problem, and it makes everything a lot more expensive when we raise that debt ceiling, because we have to print money all the time to pay for what we are short every single year.
You're saying raising the debt ceiling is potentially hurting the U.S. economy because they have to print more money and things end up costing more. Is that?
That's right, Phil. When you print more of anything, it makes the value. If you print more money, it makes the value of the money we already have worth less. And we import about 70% of what we use in this country. So everything that we buy, everything that we use is going to cost us more money. That's why things cost a lot of money in this country. People don't realize, because we import so much and our dollar has been depressed because we print so much. So when we raise that debt ceiling, which we're going to, there's no question about it, we will raise the debt ceiling. But when we do, we print more money and it makes it more expensive to live in this country.
I want to play you some sound from Christine Lagarde talking about the impact that this could have on the global economy if it does not get resolved, and I'm sure she's echoing what a lot of us feel. Let's take a listen.
The ongoing political uncertainty over the budget, over the debt ceiling, does not help. The government shutdown is bad enough, but failure to raise the debt ceiling would be far worse, and could very seriously damage not only the US economy, but also the entire global economy.
Are we getting into a situation, Ed, that we're holding the economy hostage at this point? Does this begin to stop making sense at some point?
Well, in terms of raising the debt ceiling, Phil, I have said for a long time, people don't understand the issue. When we raise the debt ceiling, we put our country at greater risk all the time, because the people who are financing us from this country don't live in this country. I mean, we finance a lot of it by printing money on our own, but we also get a lot of money from OPEC nations, from China, from Japan, from all over the world. And if they don't support our debt, then we have a catastrophe. So, you know what? We're in bad shape if we raise it. We're in bad shape if we don't raise it. We will raise it, but the government shutdown, I do want to address this, Phil. The government shutdown is not a major economic issue for this country, and it won't be. We will get through this, fairly soon, but it's not a major economic event.
Okay.
The debt ceiling issue is, for sure.
But look, I mean, you and I had a number of conversations about the economy. It wasn't that long ago that we had this discussion, and then what happened? The credit rating agency downgraded the U.S. debt, and that caused panic into the market. I mean, that can't be a good thing for the economy either. I mean, I get it. Both are somewhat bad, but shutting the whole thing down and not paying your bills, isn't that worse?
Yeah, well, first of all, if in fact we don't raise the debt ceiling, it does not mean we're going to default on our debt. That just means a lot of services in this country won't take place. So we'll just readdress that money for services that are going to be used in this country, and probably put that money over to service the debt of this country. So make sure you understand that if we don't raise the debt ceiling, that does not mean we default on our debt. You know, that continues to be talked about all the time. But you're absolutely right, Phil. If we raise the debt ceiling, that puts our credit rating at risk tremendously, because the more debt burden we bring on, the less likely we have the opportunity, or we're in a strong position to pay that debt. We're in basically a real problem in this country, and the one way we can get around it, and we've talked about this as well, Phil, is to reduce the amount of money that we are short every single year by reducing our spending. And if we don't do that soon, you know, we're going to have ourselves a real problem in this country.
Last question. Your job is to give people advice on how to make money or not lose money into the marketplace.
That's right.
What are you telling your investors to do with their money right now?
Well, look, it sounds crazy, but there's not a lot I'm telling them right now, because there's not a lot to do. We don't own any bonds, because I think interest rates are going to start creeping higher, and we've been in that position for a while. The stock market is about 15% undervalued based on expected earnings. That could change. Expected earnings could come down, but we are allocating more money into alternatives, because we're going to take advantage of some volatility that we think is going to be coming pretty soon.
All right. Ed Butowsky, always good to have you on the show. Thank you for your insights. I think we're all hoping this gets resolved, but I guess keep your fingers crossed. Thank you very much.